Okay, Yohay, you're the presenter. I look forward to hearing your voice and seeing your screen. My trading warrior brother, who I used to work live events with and have interviewed several times at FX Street. There he is. Hi, buddy.
Hi, Dale. How are you doing?
Oh, so great to hear your voice. Oh, bonus. I even get to see you. Yohay, I have to tell you right up front, I miss working with you. We had so much fun.
Yeah, it's been a while.
You liked my yelling imitation. Okay,
Oh, yeah.
You know, not everyone not everyone appreciates it. So
Yeah.
I've been telling the community that you are one of the best I know for understanding the fundamentals of each market. Okay, I remember when you were my go-to guy. You know, Blake is a big fundamentalist. He doesn't make decisions just by looking at charts, and I know you're that way too. What's your title at Forex Crunch? Editor?
Founder, editor.
Everything.
Yeah.
All right, King.
Yeah, it's mostly me. Yeah, the site is mostly me.
So, King of Forex Crunch, I recommend everyone follow Yohay and go to his site for some great fundamental analysis. Almost all of it's free. And so why don't we get going, buddy? You know, the news today, we could start with cable. Okay, you're a mind reader. So the fundamental events seem to be weighing on it. You know, they were even floating things like last week, I think Blake told me that there was some talk of canceling Brexit. You don't think that's a possibility, do you?
I think it's wishful thinking on the part of some people because, well, Brexit, there's no such thing as a good Brexit, I mean, for the pound, for the UK economy. So, and many people are what's called remoaners. They moan the result. Well, I'm also sorry, I mean, living here in Spain, I have many British friends who are also regretful, but the UK is quite a strong democracy and both parties respect the result. I don't see them going back on that. So I think it's more wishful thinking than reality. And that's why we're seeing the pound still pound dollar and also euro pound. The pound still, well,
yeah.
1 year. It's the 1 year anniversary this week, and we're still much lower than we were beforehand.
The 1 year anniversary of Brexit.
Yeah.
Oh, and yeah,
interesting.
Okay. So yeah, euro pound continues to benefit from pound weakness and euro strength. So what do you think would be fundamental events that could take the pound back to new lows or maybe down to, you know, 22-ish, 23? Is there anything on your radar screen before we move away from the pound that we should be have on our radar screen and paying attention to fundamentally there?
I think politics recently has been a lot of noise, internal politics, and the elections. Well, it did push the pound higher. Well, when the elections were announced, push it lower. But I think it's a bit back to the basics, back to the indicators. We saw how, for instance, all the indicators look weak. I mean, standards of living are falling, wages are slowing there, retail sales are falling, growth, which was quite good after Brexit initially, is now slowing. So last week we had this vote of the MPC that was, despite all this weakness, 3 members voted for a hike, but that was, for me, it was an attempt to orchestrate the pound a bit higher to keep inflation more in check. But the fundamental, I don't see them raising rates. I think that what Carney said today is more significant, and to push the pound lower, well, I think just as time passes by, we'll get more negative indicators from the real economy, and yeah, I see more downside.
You talk about weakness in the economy. Is it beginning to have any impact? I know the real estate market globally has been on fire, and, you know, especially in London. So has the Brexit hurt real estate prices in the last year or so?
Yeah, we've seen this week, I think yesterday, the Rightmove HPI, house price index in the UK, show a drop, especially in London. So less money is flowing over there. We have lots, as you mentioned, money of rich Chinese Greeks, well, everybody, French has been flowing into London, and I think with Brexit, there's sort of this reality check with Brexit, and prices are just too high over there. So that's another negative for the pound, that house prices are at least stalling, at least reached some kind of halt at the moment.
What country in Europe is going to benefit the most from Brexit, as this exodus from the London financial district, which I don't think will completely go away, but maybe dented a little bit? Where are people going?
I think there's no, I mean, in terms of financial centers, there's no full replacement. And there's the first tier is Paris, Frankfurt, then there's Dublin. People also mentioned Madrid. I live here in Barcelona. I think, as you said, financial services will still remain important in London. It's just too big. But in terms of new companies, startups, where multinational companies hire new people, it'll be outside. At least here in Barcelona, I'm aware of a growing startup scene, also in Madrid. So some people call Barcelona the Silicon Valley of Europe, which I found exaggerated, but at least it's good news for where I live.
You better lock in a lease on your place. Rents will go up, buddy.
Yeah, rents have gone up in Barcelona 20% in the past year. So
it has already, huh? Okay, sorry, I didn't have you on a year ago. So anyway, Yohay, why don't we move over to Euro? And, you know, the Euro's been resilient. We've had this 1,000 pip move off the low. And what's driving Euro prices and making them stiff is what? The market's expectation that we're moving closer to the end of QE. What fundamentals are driving this? And do you think that even if we say had a pullback in Euro to 110, 109, maybe even 108, that would just be a correction in the bull market? Or do you think, and I'm starting to think that parity people may have to wait a long time to see that?
Yeah, maybe a few years. I think there was a chance for parity at the beginning of the year when the Trump trade was full on, and well, Europe was still struggling in terms of growth, but Trump didn't deliver. I mean, I thought the dissolution from Trump would take at least 100 days or so. At the end of April, it would coincide with the French elections, but it happened a bit earlier. So we had this bounce off the lows. Currently, well, I think the trend remains to the upside, the long-term trend. Politics look better in Europe with Macron and Merkel, and then in the US. Economic growth here is stronger, 2.3% in Q1 against 1.2 in the US. And monetary policy until 2 weeks ago, I would say it also had an advantage, but Draghi went dovish, the Fed went hawkish. So I think what we're seeing on the charts is exactly what we're seeing also in fundamentals, that a pause, so maybe medium term we'll see. And this resistance line of 113, which was the election high in the US, the US election high, that proved to be a very nice barrier. Technicals don't always work that well. There's so many moving parts in euro dollar. This was the case where they worked pretty well.
Okay, so we have this pause here, pause to refresh, possibly with you're over there, you're in Europe, with the reaction of the U.S. pulling out the Paris Climate Act or whatever it is it actually a cohesive event for Europeans, and are they going to start drawing closer to Russia and China? I mean, even the UK went to that new bank that China started that's supposedly going to compete with the World Bank. So was that a seminal event from Europeans' perspective?
It was quite a disappointing event here in Europe because the US and China were working together on this climate, I mean, the two biggest polluters, the two biggest economies in the world, and this U-turn was quite disappointing for Europe. But I think regarding getting closer to China, it began already earlier. I mean, the German miracle, the export machine, export growth, and Germany relied on China more than its Eurozone peers. The UK with Brexit, they talked about forging new trade deals with the US and with China. So looking towards China with the Chinese Belt and Road Initiative, which is very ambitious and expected to reach Europe, I think it isn't new, but with the US sort of taking a step back from the world, that of course...
China is going to step in and fill the vacuum.
Not all of it. The United States is still number one, but it's a step back, and it allows China to take one step forward. So
okay.
That's a development. Yeah.
Okay. So your view is that this is just a pause in the euro, and there's still a chance for the dollar decline to continue against the euro after a pullback. I know some people were talking 120-ish was pretty doable this year, maybe better. Are you in that camp?
Yeah, I think 120 is possible in the second half. I mean, towards the end of the year. I don't think it's going to be a big leap. Unfortunately, volatility is quite low, but I see the trend is continuing to the upside. Growth prospects are positive here. Political prospects are better, and eventually, at least after the German elections in September, with more uncertainty removed, then Draghi can begin talking about tapering, and then we could see maybe an acceleration more in the fourth quarter than in the third one.
Okay, if I'm a little, would be interested in your view on the yen, because we had a pretty tremendous bond bear market rally, whatever you want to call it, and it's really the key risk on, risk off instrument. You could correlate it with gold pretty well. US dollar yen goes down, gold goes up, vice versa. Same with 10-year yields, pretty close correlation. What's your view on this? I think the market's pretty split. There still are a lot of long-term yen bulls, talking 118. I've even seen some super bulls like I had Jamie Satley on one day, and he talked about 150. What's your view on the yen? Do you just have to stay neutral with this pair? Or what fundamental events are going to drive it? I know the news out of there, they're celebrating that they're no longer in a deflationary period. Do you agree with that, or is that
celebrations are?
Huh?
I think celebrations are a bit premature, but they're similar to Draghi. They're sort of not ready to let go of the monetary loosing pedal, if you wish. I mean, they're not turning to the hawkish side like the Fed's surprised last week. So they're continuing to print yen to buy bonds. But for me, dollar yen is usually the best reflection of U.S. dollar strength or weakness. So we had and of course, as you said, well correlated to U.S. yields. Everything goes together. The Fed is hawkish. The U.S. dollar rises, and it's best reflected in dollar yen. I mean, when people talk about the dollar, in many cases talk about dollar index, but that leans a bit too heavy, in my opinion.
On the euro.
Yeah. So dollar yen is.
So that's a pearl. That's a pearl face that your best indication of dollar strength or weakness is U.S. dollar yen. So, that I'm going to start paying more attention to it instead of trying to get all my cues from Dixie. So you have a view on directionality on this yen at all?
Of course, went a bit up from the top side. I still see it a bit lower in range because I'm not so optimistic about the US dollar. Of course, it went up. We're sort of in the middle of the wide range between 108.10 to 114.30, the cycle low and the cycle high, bang in the middle, actually. So I think there's more room to the downside, but based on fundamentals. But if you look at technicals, you see a higher low, of course. So
that it sounds like you're like me. You're strongly neutral with a bearish bias.
Yeah.
I can't just be.
Yeah.
We can't just be neutral, Yohay. We have to be strongly neutral. So
strongly, decidedly mixed.
Yeah. So why don't we move on to commodity currencies? Canada, Aussie. You know, we have some pretty good oil weakness. Canada looked to me like, you know, we had a false breakout over 135.5, 38. We've had a pretty good break. Crude has been going down for a while, and you don't get much of a lift. Say like that June period, crude was getting smashed, and you really didn't get much of a lift in Canada. Couldn't even retrace half the move. What's your view on USD CAD?
Well, the biggest mover recently of the Canadian dollar, well, Canadian dollar to the upside, dollar CAD to the downside, was the hawkish shift by the Bank of Canada, first Wilkins, then the governor. So, and I think in this case, contrary to what we had with in the UK last week, it's real. The Canadian economy is looking quite good, despite the fall in the price of oil, despite worries about home prices in Toronto. The wider economy is doing well. There's very strong job growth almost every month there, and growth is also, well, in general, looking good. So this hawkish bias is justified. I think that 137.90 peak earlier this year was the peak for the year. Of course, oil prices are close to the lows, but what we've seen in oil prices in the past 2 years is sort of this pendulum swing. Once they fall too much, the U.S. shale industry produces a bit less, and then prices go up, they produce a bit more. So there is a lot of noise, but I don't see another collapse of oil prices to where we were at early last year.
How about 38 to 35?
Yeah, I think
that's like monthly pivot points support, something like that.
Yeah, currently 43.20. So well, as I speak, of course, it's going in the other direction. But 42 was a low seen late last year, and then we have.
It's like you look at the last 2 weeks from 52 to 43. You know, basically, you know, $8, and then you go back to Canada, and the good part of that decline, Canada was only able to move sideways. It couldn't rally. That to me was a bit of a market tell. That little flag area we had in Canada before last week's puke job. So I think a lot of people might get tricked in Canada that are bearish oil and looking for a Canadian rally, USD CAD rally. So your view on, say, Aussie Kiwi here, and you know, if you have a Kiwi position, I'll either drink more or drink less milk.
I actually tried drinking soy milk and things like that because they say it's healthier. So I'm not contributing to the New Zealand economy, but sorry. But
I won't need antacids either. So okay, so for lactate intolerant people, what's your take here on Kiwi? We have I know Blake has a lot of interest. There's central bank is meeting this week. What are your expectations?
They usually like to talk down the Kiwi Governor Wheeler and his colleagues there at Wellington, so I think they'll give a small nudge to the downside. Of course, there's been quite a rise to the upside, so and they don't like it. But again, fundamentals are positive for the economy over there. Price of milk, we're supposed to have an auction right now. Well, still no data out there, but the past 5 or 6 auctions have been positive for the price of milk. The economy is doing well. There were cyclical growth in Asia and also in Europe. Also, well, it's a relatively positive time for global growth and a risk on, so I think it'll be hard for them to match. I mean, if they hit the Kiwi, that will be perhaps a buying opportunity. Levels I'm looking at 73.20. Recent high, of course, is level to watch, and the recent low is 71.70.
So then what would be your view on Aussie Kiwi? Do you think the Kiwi's going to continue? As of late, you know, the Aussie Kiwi had a nice move to the upside. We tested major support last week. Are you looking for Kiwi to outperform Aussie or the other way around?
Kiwi outperformed the Aussie. Maybe now we'll have some catching up. This parity is always elusive, and I'm sure New Zealanders are looking for that parity with their rivals in Australia, and I'm not sure that's coming because usually these economies just grow and expand and contract, or not contract, and slow down and accelerate together. So I would.
So it's just a matter of magnitude, how much they slow down or how much they expand.
Yeah,
but they rarely diverge from each other.
No, because both commodity currencies, neighbors. Of course, there's a difference between milk and copper, different markets, but they do tend to go together. Yeah.
Well, Yohay, you want to show your website so people could take a look at it and know what it looks like and give your Yohay's Twitter handle, he's a must follow, is @ForexCrunch, and he does great articles. In fact, I'm a betting man. I bet that this interview will be on your website in the next couple of days.
Yeah.
So there's ForexCrunch right there. His screen's popping, but great articles, very good support for traders, good technical looks. You have a lot of contributing editors on this site, Yohay, or is it mainly your writings?
Well, I would say 60% me, and the rest is contributions on more technical analysis because I lean more to fundamentals and some educational content. So thank you very much for the kind words. It's also been such a pleasure speaking with you after a long time. I've seen your amazing website with your colleagues there at
what a team, Yohay. You know, some guys on Twitter have called it the dream team.
Yeah, makes sense. I don't know all the guys there, but I know Blake, I know Grega, that Elliott Wave Forecasts, and the other names also ring a bell. And the site looks amazing, and I'm sure you're giving a great service. I know your dedication, of course, to traders in various places you've been throughout your career. So
it's hard to keep up, huh, buddy?
Yeah. But enthusiasm hasn't changed since we last spoke.
Well, thank you so much, my friend and trading warrior brother, Yohay Elam, and let's get back together a little bit down the road. Have a great year, my friend. I'm always hoping the best for you and yours. Okay.
Thank you very much.
You're welcome. Everyone, that was Yohay Elam. Should be your source for fundamental information. As you could tell, the guy knows his stuff. And, the blinking, yeah. Okay. The blink, giving him a seizure. So before that happens, Ron, I'm going to wish everyone a great day. And I'll see everyone tomorrow. Good hunting. And remember, don't just count your pips, count your blessings. And thank you for your psychedelic presentation, Yohay.